Welcome to BrandZ and an explanation of our methodology. We begin with a brief introduction that answers three fundamental questions. Why is brand important? Why is brand valuation important? Why is BrandZ the definitive valuation tool? Importance of brand. Brands embody a core promise of values and benefits consistently delivered. Brands provide clarity and guidance for choices made by companies, consumers, investors, and other stakeholders. Brands provide the signposts we need to navigate the consumer and B2B landscapes. Importance of valuation. Sustaining business performance requires measuring it. That principle applies to brands. Brand valuation is a metric that enables the brand owners and the investment community and others to evaluate and compare brands. Brand valuation enables faster and better informed decision-making because it helps identify where value is derived. BrandZ is the only valuation tool that peels away all of the financial and other component factors of brand value and gets to the core, how much that brand alone contributes. We call this core brand contribution. It's the secret sauce. Here's how we arrive at it. The process. Brands are usually created by corporations, so think of brand valuation as a two-part process. First, we calculate the financial value created by a corporation. Second, we identify the role that brand has in creating that value. The uniqueness of the BrandZ rankings is that we have the most detailed and rigorous approach to identifying the role of brand and how it influences customer purchase decisions. Defining terms. Value. Before we move on, we need to define some terms. What do we mean by value? We mean the measurable financial worth that a business creates. Value is generated with the help of assets, and assets are valuable only if they can generate profits or earnings. Measuring that value, however, is not about earnings in the past or even in the present. It is about the level of future earnings. Assets. What do we mean by assets? Assets are something of value owned by a business. But it's important to emphasize that assets are split into two groups. There are tangible assets, such as factories, stock, vehicles or equipment, and there are intangible assets, such as intellectual property, software, people, and brand. The asset we are most interested in, brand, happens to be the most valuable asset for many major corporations. Separate entities. Of course, a brand only should be given credit for the earnings that are created under the brand name. That sounds self-evident, but consider this. In some cases, a corporation only owns one brand. Therefore, all corporate earnings come from the brand. Example, Red Bull. In other cases, a corporation owns many brands. Therefore, we need to apportion the earnings of the corporation across a wide portfolio of brands. Example, the Coca-Cola Company, where we need to allocate earnings to Coca-Cola, Fanta, Sprite, and other brands. Attribution rate. Corporate earnings to branded earnings. To make sure we apply the relevant portion of corporate earnings to the brand, we use what is called the attribution rate. The attribution rate is expressed as a percentage. The information for corporate earnings comes from Bloomberg. The attribution rate is sourced from annual reports and other data such as Kantar World Panel. By multiplying corporate earnings by the attribution rate, we arrive at branded earnings. Branded earnings refers to the amount of earnings attributed to a particular brand. So, for example, if the attribution rate of a brand is 50%, then half the corporate earnings are identified as coming from that brand. Brand multiple. calculating future earnings. Now it's time to think about the future. As we said when we described value, the important measurement is not what happened in the past or even what's happening today, but rather the prospects for future earnings. Predicting future earnings requires adding another component to our BrandZ formula. This component assesses future earnings prospects as a multiple of current earnings. We call this component the brand multiple. It's similar to the calculation used by financial analysts to determine the market value of stocks and shares. Example, 6 times earnings or 12 times earnings. Information supplied by Bloomberg data helps us calculate a brand multiple. We take the branded earnings and multiply that number by the brand multiple to arrive at the future earnings potential, which we call financial value. Brand contribution, the secret sauce. This is the part that distinguishes BrandZ as the definitive brand valuation tool. We now have the value of the branded business. For example, the value of Coke or Fanta or Sprite as a business. But this value is still not quite the core that we are after. To arrive at brand value, we need to peel away a few more layers, such as the rational factors that influence the value of the branded business. For example, price, convenience, availability, and distribution. In order to calculate brand value, we need to concentrate purely on understanding how much of a brand's earnings are entirely due to brand equity reasons. Because a brand exists in the mind of the consumer, we have to assess the brand's uniqueness and its ability to stand out from the crowd, generate desire, and cultivate loyalty. We call this unique role played by brand contribution. Brand contribution, the measurement. But how do we measure brand contribution? In order to achieve this, we use our unique and proprietary BrandZ methodology. We calculate brand contribution based on detailed research amongst the people who really matter, the relevant target audience for each of the brands being valued. The BrandZ approach to brand contribution is quantified and rigorous, and this distinguishes BrandZ from other rankings that rely only on subjective opinion or the views of an expert panel. We obtain this customer viewpoint by conducting painstaking, ongoing, in-depth quantitative research, mainly online but also face-to-face, building up a global picture of brand on a category-by-category and a country-by-country basis. Our research now covers over 2 million consumers and more than 50,000 brands in over 30 countries. This knowledge provides global perspective and enables us to view brand value across countries and categories and over time. We're about to add brand contribution into our formula to calculate the final brand value. But first, let's quickly review. We took branded earnings and multiplied that number by the brand multiple to arrive at expected future earnings potential, which we call financial value. Now we take the financial value and multiply it by brand contribution, which is expressed as a percentage of financial value. The result is brand value, a figure that's expressed in dollars. What's the significance of brand value? Let's go back to the Coca-Cola Company example. We've isolated the equity of the Coke brand from the rest of the value of the corporation and its other brands. The brand contribution of Coke represents a significant source of additional shareholder value that otherwise wouldn't exist. BrandZ Top 100 Leadership. Finally, here are the 3 reasons why this unique approach makes the BrandZ Top 100 the world's most robust ranking of brand value. BrandZ is the only ranking that uses dedicated customer-level research, funded every year by WPP, to identify how the role of brand influences purchase decisions. This means that our measure of brand contribution is the only one that is entirely objective. The BrandZ research methodology has been in use since 1998 and has been sales validated. This means that the causal links between brand strength, sales and profit have been proven over time. BrandZ is the world's most comprehensive source of brand equity knowledge and insight. This means it has unparalleled ability to provide a validated and benchmarked understanding of brand contribution, what it is, what it means, and what it represents for a brand. We hope this short explanation helps you better understand what goes into BrandZ and why we believe that it's the definitive brand valuation methodology. Thank you.